Hi, it's Sarah. Today I am going to discuss Chapter 4 of the course Accounting Information System. Our topic is the Expenditure Cycle, Purchasing and Cash Disbursement Subsystems. This topic is the first of a series of discussions about the subsystems of the businesses or accounting cycle. As always in the practice of accountancy, we should remember to be professional, perform effectively and efficiently, follow standards, and document our work adequately and properly. Our topics for this lecture video are 1. Definition, nature, and phases. Describes the physical and financial phase of an expenditure cycle transaction. 2. Conceptual system. Discusses the technology-neutral tasks that must be performed in both purchasing and cash disbursement subsystems. We will be using the data flow diagram or DFD method of representing the flow of data among the different tasks in a subsystem. Physical system, basic, presents the system that employs independent personal computers in various sections of the organizations that function primarily as record-keeping devices. Topic 4. Physical system, advanced, presents a more advanced system that integrates all business functions through a central computer application managed by a dedicated IT department, in here represented by the Computer Operations Group. And 5. Risks and internal control. Discusses the primary risk associated with the two subsystems, as well as the suggested internal control measures that management could put in place to mitigate or eliminate those risks. In topic 6, we will conclude this chapter with an overview of electronic data interchange, EDI, process, which poses unique risks for organizations that need to be recognized and controlled. We will consider the case of re-engineering the expenditure cycle by the Ford Motor Company using EDI. On to our first topic.
The purchasing subsystem, definition and nature. The objectives of the expenditure cycle is to convert the organization's cash into physical materials and human resources it needs to conduct business. In this chapter, we concentrate on systems and procedures for acquiring raw materials and finished goods from suppliers. The system and procedures also apply to the acquisition of office supplies for the supporting units of the organization that are not directly involved in the production and selling processes. This discussion examines the principal features of the two major subsystems that constitute the expenditure cycle. 1. The purchases processing subsystem, and 2. The cash disbursement subsystem. This chapter is organized into two main sections. The first section provides an overview of the conceptual system, including the logical tasks, the key entities, the sources and uses of information, and the flow of key documents through an organization. The second section deals with physical systems, which are composed to varying degrees of technology and human activity. This section reviews systems options that lie at different points on the tech-human continuum. Two objectives drive the discussion in this chapter. The first is to illustrate system functionalities, efficiency issues, and workflow characteristics of different technologies. The second is to demonstrate how internal control issues differ between systems at various points on the tech-human continuum. Most business entities operate on a credit basis and do not pay for resources until after acquiring them. The timeline between these events splits the procurement process into two phases. The physical phase involving the acquisition of the resources, and 2. The financial phase involving the disbursement of cash. As a practical matter, these are treated as independent transactions that are processed through separate subsystems.
The conceptual system. As pointed out in Chapter 1, accountants play a prominent role on systems development teams as domain experts. In that capacity, they are responsible for many aspects of the conceptual system. This involves specifying certain operational rules, reporting requirements, and framing internal control objectives that the system must achieve. Using a technology-neutral DFD as a guide, we will trace the sequence of activities that may be performed manually or by computer. At this point, our focus is on what conceptually needs to be done, not how physically it is accomplished. At various stages in the process, we will examine specific files and documents, journals and ledgers that may be physical, hard copy, or digital, computer-generated. It should be noted that data flow diagrams do not show which department responsible for the task. We will only refer to such units as functions. In the abort assess processing procedure, the following are conceptually what needs to be done. 1. Monitor inventory records. 2. Prepare purchase order. 3. Receive goods. 4. Update inventory records. And lastly, 5. Set up accounts payable. The relationship between these steps are presented in the following slides. In general, these procedures apply to both manufacturing and retailing firms. A major difference between the two business types lie in the way purchases are authorized. Manufacturing firms purchase raw materials for production, and their purchasing decisions are authorized by the production planning and control function. These procedures are described in the conversion cycle. Merchandising firms purchase finished goods for resale. The inventory control function provides the purchase authorization for this type of firms. Slide 7. Monitor inventory records. Firms deplete their inventories by transferring raw materials into the production process, the conversion cycle, and by selling finished goods to customers. Revenue cycle. Our illustration assumes the latter case, in which inventory control monitors and records finished goods at inventory levels. When inventories drop to a predetermined reorder point, a purchase requisition is prepared and sent to the Prepare Purchase Order function to initiate the purchase process. The task of identifying a low-level inventory condition and creating a purchase requisition is also found in the revenue cycle activities. For efficiency and control purposes, the purchase requisition contains routine ordering information taken from the inventory subsidiary ledger and value vendor file. This includes the name and address of the primary supplier, the economic order quantity of the item, and the standard or expected unit cost of the item. Providing this information to the purchasing agent allows him or her to deal with routine purchases as efficiently as need control permits, and to devote his or her primary efforts to non-routine problems such as sourcing scarce, expensive, or unusual inventory items. The valid vendor file provides an important control by listing only approved vendors. The purpose is to ensure that the organization purchases inventories only from authorized and reliable vendors. This helps to reduce certain vendor fraud schemes, such as an agent buying from suppliers with whom he or she has a relationship, a relative or a friend, or buying at excessive prices from vendors in exchange for a kickback or bribe. Although procedures vary from firm to firm, typically a separate purchase requisition is prepared for each inventory item as the need is recognized. This often results in multiple purchase requisitions for a single vendor. The purchase requisitions therefore need to be combined into a single request, that is, the purchase order. Prepare purchase order. The Prepare Purchase Order function receives the purchase requisitions, which are then sorted by the vendor, if necessary. Next, the purchase order, or PO, a sample of which may be found in a folder of my Google Drive shared from the FB post. It is prepared for each vendor. A copy of the PO is sent to the vendor. In addition, a copy is sent to the Setup Accounts Payable function for filing temporarily in the AP's pending file, and a blind copy is sent to the Receiving Goods function, where it is held until the inventories arrive. The last copy is filed in the open/close purchase order file. Received goods. Most firms encounter a time lag, sometimes a significant one, between placing the order and receiving the inventory. During this time, the copy of the PO resides in temporary files in various departments. Note that no economic event has yet occurred. At this point, the firm has staved no inventories and incurred no financial obligation. Hence, there is no basis for making a formal entry into any accounting record. Companies will often, however, make memo entries of pending inventory receipts and associated obligations. Receive goods. The next event in the expenditure cycle is the receipt of the inventory. Goods arriving from the vendor are reconciled with a blind copy of the PO. The blind copy, a sample, can be found in the folder in my Google Drive shared from the FB post. Contains no quantity or price information about the products being received. The purpose of the blind PO is to force the receiving clerk to count and inspect inventories prior to completing their receiving report. At times, receiving docs are very busy, and receiving staff are very under pressure to unload the delivery trucks and sign the bills of lading so the truck drivers can go on their way. If receiving clerks are provided with quantity information, they may be tempted to accept deliveries on the basis of this information alone, rather than verify the quantities and condition of the goods by physical counting and inspection. Shipments that are missing items or contain damaged or incorrect items must be detected before the firm accepts and places the goods in the inventory. The blind copy is an important control in reducing this risk. Upon the completion of the physical count and inspection, the receiving clerk prepares a receiving report. Also, a sample copy may be found in the folder of the Google Drive from the FB post, stating the quantity and condition of the inventory. One copy of the receiving report accompanies the physical inventories to either the raw materials storeroom or finished goods warehouse for safekeeping. Another copy is filed in the open/closed PO file to close out the PL. The third copy of the receiving report is sent to the Setup Accounts Payable function, where it is filed in the AP Pending file. The fourth copy of the receiving report is lent to Inventory Control for updating the inventory records. Finally, a copy of the receiving report is placed in the Receiving Report file. Update inventory records. Depending on the inventory valuation method in place, the inventory control procedures may vary somewhat among firms. Organizations that use a standard cost system carry their inventories at a predetermined standard value, regardless of the price actually paid to the vendor. An example of a standard cost ledger is also available from the Google Drive folder that I shared from the FB post. Posting to a standard cost inventory ledger requires only information about the quantities received. Because the receiving report contains the quantity information, it serves this purpose. Updating an actual cost inventory ledger requires additional financial information, such as a copy of the supplier's invoice when it arrives, set of accounts payable. During the course of this transaction, the Setup AP function has received and temporarily filed copies of the PO and receiving report. The organization has received inventories from the vendor and has incurred or realized an obligation to pay for the goods. Disappointing the process, however, the firm has not received the supplier's invoice containing the financial information needed to record the transaction. The firm will thus defer the recording or recognizing the liability until the invoice arrives. This common situation creates a slight lag, a few days in the recording process, during which time the firm's liabilities are technically understated. As a practical matter, this misstatement is a problem only at period end, when the firm prepares financial statements. To close the books, the accountant will need to estimate the value of the obligations until the invoice arrives. If the estimate is materially incorrect, an adjusting entry must be made to correct the error. Because the receipt of the invoice typically triggers AP procedures, accountants need to be aware that unrecorded liabilities may exist at period end closing. Set up accounts payable. When the invoice arrives, the AP clerk reconciles the financial information with the receiving report and PO in the AP pending file. This is called a three-way match, which verifies that what was ordered was received and is fairly priced. Once their reconciliation is complete, the AP clerk prepares an AP packet, which consists of the supporting documents, the PO, receiving report, and invoice, and files the AP packet in the open AP file. Once reconciled, the AP packet is the formal authority to record the liability and to subsequently make payment. Next, the transaction is recorded in the purchase journal and posted to the supplier's account in the AP subsidiary ledger. Samples in the Google Drive folder show the relationship between these accounting records. Recorded in an inventory valuation method will determine how inventory control will have recorded the receipt of inventories. If the firm is using the ACLER cost method, then the AP clerk will send a copy of the supplier's invoice to inventory record or inventory control. If standard costing is used, this step is not necessary. Finally, the AP clerk summarizes the entries in the purchase journal for the period or batch and prepares a journal ledger for the general ledger function. Assuming the organization uses the perpetual inventory method, the journal entry will be in inventory control and credit accounts payable control. If the periodic inventory method issues, the entry will be debit purchases and credit accounts payable. Vouchers payable system. And maintains a voucher register. After the AP clerk performs the three-way match, he or she prepares a cash disbursement voucher to approve payment. Vouchers provide improved control over cash disbursements and allow firms to consolidate several payments to the same supplier on a single voucher, thus reducing the number of checks within. Another example of a voucher is found at the Google Drive folder shared from the FB post. Its voucher is recorded in the voucher register. The voucher register reflects the AP liability of the firm. The sum of the unpaid vouchers in the register, those with no check numbers and paid dates, is the firm's total outstanding balance. The accounts payable clerk files the cash disbursement voucher along with supporting source documents in the vouchers payable file. This file is equivalent to the open AP file discussed earlier. Post to General Ledger. This task is common to all processes we'll discuss. It is always the last task that is performed after reconciliation of documents by those in charge of updating the General Ledger to ensure accuracy before recording. The General Ledger function receives a journal voucher from the Accounts Payable department in an account summary from Inventory Control. The General Ledger function posts the data contained in the journal voucher to the Inventory and Accounts Payable control accounts and reconciles the Inventory Control account with the Inventory Subsidiary summary. The journal voucher is then filed in the approved journal voucher file. With this step, the purchases phase of the expenditure cycle is completed. The cash disbursement subsystem. The cash disbursement system is the downstream system that continues the rest of the process with the financial phase. It processes the payment of obligations created in the purchases subsystem.
Cash Disbursements Subsystem Definition and Nature. The principal objective of this subsystem is to ensure that only valid creditors or vendors receive payment and that amounts paid are timely and correct. If the system makes payments early, the firm forgoes interest income that it could have earned on the funds used to pay the creditors. If obligations are paid late, however, the firm will lose purchase discounts or may damage its credit standing. The following slides presents a data flow diagram conceptually depicting the information flows and key tasks of the cash disbursement subsystems, which are 1. Identify liabilities due, 2. Prepare cash disbursement, 3. Update accounts payable record, and 4. Pulse to the general ledger. Identify liabilities due. The cash disbursement process begins in the accounts payable department, where each named accounts payable clerk reviews the open AP file for items due for payment. Typically, this file is organized by payment due date to ensure the debts are paid on the last possible date without missing due dates and losing discounts. The clerk sends payment approval in the form of the AP packet, which contains the PO receiving report and supplier's invoice, to the cash disbursements department. Prepare cash disbursement. The cash disbursements clerk receives the accounts payable packet and reviews the documents for completeness and clerical accuracy. For each disbursement, the clerk prepares a check and records the check number, peso amount, and other pertinent data in the check register, which is also called the cash disbursement journal. Another sample of the check register and cash disbursement journal may be found in the Google Drive folder shared from the FB post. Depending on the organization's materiality threshold, the check may require additional approval by the cash disbursements department manager or treasurer. The negotiable portion of the check is mailed to the supplier. A copy of it is attached to the accounts payable packet as proof of payment, and a check copy is filed in the department. The clerk marks the document in the packet pay and returns them to the AP clerk. Finally, the cash disbursements clerk summarizes the entries made to the check register and sends a journal voucher with the following journal entry to the general ledger function: debit accounts payable and credit cash. Debit accounts payable record. Upon receipt of the paid AP packet, the AP clerk removes the liability by debiting the vendor's accounts payable subsidiary ledger account. The AP packet is then filed in the closed AP file, and an account summary is prepared and sent to the general ledger function. Post to the general ledger. The general ledger function receives the journal voucher from cash disbursements and the accounts payable summary from accounts payable. The voucher shows the total reductions in the firm's obligations and trash account as a result of payment to the suppliers. These numbers are reconciled with the accounts payable summary, and the accounts payable control and cash accounts in the general ledger are updated accordingly. The approved journal voucher is then filed. This concludes the cash disbursements procedures.
The physical system. Physical accounting information systems are combinations of computer technology and human activity. The mix of possible technology-human or tech-human options create a continuum. At one end are minimal technology systems that rely heavily on human involvement and manual procedures. The computers used in these systems are independent, non-networked PCs. Therefore, information flows between departments are communicated via hard copy documents. In addition, in such systems, maintaining physical files of source documents is critical to the audit trail. At the other end of the continuum are advanced technology systems, which replace human activity with automated processes. The purpose of advanced technologies is to integrate accounting and other business functions through a common information system. Integration improves operational performance and reduces costs by eliminating non-value-added tasks. Advanced technologies can significantly alter and simplify the expenditure cycle compared to the basic technology system. Systems at different points on the continuum operate differently and present different internal control issues. The objectives of this section, as also mentioned earlier, are to 1. Illustrate the accounting information systems, or AIS, functionality and workflow pattern under different levels of technology, and 2. Demonstrate how the internal control profile changes as the tech-human mix changes. To accomplish this, we review examples of systems at different points on the continuum. Basic Technology Purchasing System. On the slide is the flowchart of a typical basic technology purchasing system. Note that flowcharts are akin to what we call as business processes. For classroom purposes, we will refer to this type of document as business process. These show the tasks, documents, and data files of the process. In contrast to the data flow diagram, the business process also shows the department as opposed to function responsible for the tasks. Also, the borders indicate the scope of the responsibilities of the departments. All tasks that fall under a particular department's swim lane are their responsibility. As we walk through the business process, notice that in many departments, after an individual completes his or her assigned task, documents are filed as evidence that the tasks were performed. The following slides outline the key activities in this process by department. Inventory control. The process begins when the inventory control clerk prints purchase requisitions from his PC by accessing the purchase requisition file. Recall that this file was created during the sales activity when the inventories dropped to their predetermined reorder point. One copy of the requisition is sent to the purchasing department, and one copy is placed in the hard copy open purchase requisition file. Note that to provide proper authorization control, the inventory control department is segregated from the purchasing department. Purchasing department. The purchasing department receives the purchase requisition, sorts them by vendor, and adds a record to the digital open purchase order file. The clerk then prints a multi-part PO for each vendor. One copy of the PO is sent to the vendor. One copy is sent to the inventory control, where the clerk files it with the open purchase requisition. One copy of the PO is sent to the accounts payable for filing in the AP pending file. One copy, the blank copy, is sent to the receiving department, where it is filed under the inventories arrived. The clerk files the last copy along with the purchase requisition in the department. Receiving. The receiving department clerk receives the goods and the packing slip from the vendor and receives the goods with a blank copy of the PO. Upon completion of the physical count and inspection, the receiving clerk adds a digital record to the receiving report file and prints a multi-part hard copy receiving report stating the quantity and condition of the inventories. One copy of the receiving report accompanies the physical inventories to the storeroom. Another copy is sent to the purchasing department, where the purchasing clerk reconciles it with the open PO and closes the digital record in the open PO file. The purchasing clerk then files the hard copy receiving report along with the previously filed purchase requisition and the purchase order. The third copy of the receiving report is sent to inventory control, where, assuming a standard cost system, the clerk uses the department PC to update the digital inventory subsidiary ledger. The system automatically removes the on order flag that was set when the purchase requisition was created. The inventory control clerk then files the hard copy receiving report in the department along with the PO and the purchase requisition. The fourth copy of the receiving report is sent to the accounts payable department, where it is filed in the AP pending file. Finally, the receiving clerk files the blank copy PO and the packing slip in the receiving department. Accounts Payable Department. When the supplier's invoice arrives, the AP clerk reconciles the invoice, purchase order, and receiving report, a three-way match, and prepares an AP packet, which in this paper-oriented system is simply a folder containing the reconciled supporting documents. The clerk next records the transaction in the digital purchases journal and posts the liability to the supplier's account in the accounts payable subsidiary ledger. The clerk then files the accounts payable packet in the open AP file. The General Ledger Department. The General Ledger Department receives a journal voucher from the Accounts Payable Department and an account summary from Inventory Control. The General Ledger clerk reconciles this and posts to the Inventory and AP Control accounts. With this step, the purchases phase of the expenditure cycle is completed. Basic Technology Cash Disbursements System. A detailed system flowchart of a basic cash disbursement system is presented on the slide. The tasks performed on each of the key processes are discussed next. AP Department. Each day, the AP clerk reviews the AP packet in the open AP file for items due and sends the supporting documents to the Cash Disbursements Department. Cash Disbursements Department. The Cash Disbursements clerk receives the AP packets and reviews the documents for completeness and clerical accuracy. For each disbursement, the clerk prepares a three-part check and records the check number, the peso amount, and other pertinent data in the check register. The check, along with the supporting documents, goes to the Cash Disbursements Department manager or treasurer for his or her signature. The negotiable portion of the check is mailed to the supplier. The clerk returns the AP packet and check copy to the AP department and files one copy of the check. Finally, the clerk summarizes the entries made to the check register and sends a journal voucher to the General Ledger Department. Back to the Accounts Payable Department. Upon receipt of the AP packet, the AP clerk removes the liability by debiting the vendor's digital AP subsidiary record. Next, the AP packet is filed in a closed AP file. And finally, the clerk sends an AP summary to the General Ledger Department. General Ledger Department. Based on the journal voucher from Cash Disbursements and the account summary from Accounts Payable, the General Ledger clerk uses the department PC to pulse to the General Ledger Control accounts and files the documents. This concludes the cash disbursements procedures.
Integrated Purchases Processing System. The business process on the slide illustrates a typical integrated purchases system. Notice that the level of departmental activity is significantly lower than that of the basic technology system presented previously. Labor-intensive activities that characterize the basic technology system add greatly to the cost of system operation and result in human error. In the advanced technology system, computer programs perform many clerical tasks, which is much deeper and far less prone to error. Although the traditional department structure still exists, in advanced technology environments, personal responsibilities are refocused on financial analysis and exception-based problem solving, rather than on day-to-day clerical tasks. As a result, these departments are smaller and more efficient than their basic technology counterparts. Each phase of the re-engineered system is described in the next slides. Computer operations. The purchases computer application performs the following tasks automatically. 1. The system reads the purchase requisition file for items that need to be replenished. The requisitions are then sorted by the vendor and matched against the vendor file for vendor address and contact information. 2. Hard copy purchase orders are prepared and sent to the vendor. 3. a record is added to the open PO file. 4. A digital transaction listing of POs is generated, which is downloaded by the purchasing agent, reviewed, and filed in the department. Receiving department. When the goods arrive, the receiving clerk accesses a blank copy of the OpenTO file in real time by entering the PO number taken from the packing slip. The receiving screen, illustrated in a sample that is posted in a Google Drive folder, then prompts the clerk to enter the quantities received for each item on the PO. The following tasks are then performed automatically by the system. 1. A record is added to the receiving report file. 2. Quantities of items received are matched against the OpenTO record, and the PO is closed by placing the receiving report number on the PO closed flag. And another sample is presented in a Google Drive folder for this transaction. 3. The inventory subsidiary records are updated to reflect the receipt of the inventory items. And 4. The general ledger inventory control account is updated. Accounts payable department. When the AP clerk receives the supplier's invoice, the clerk accesses the system and adds a record to the vendor invoice file. The clerk then files the hard copy invoice in the department. The following tasks are then performed automatically by the system. 1. Using the PO number as a common attribute, the system links the vendor invoice to the associated purchase order and receiving report records. The system reconciles the supporting documents and creates a virtual AP packet to authorize payment. 3. The system displays the virtual AP packet on the AP clerk's computer screen for review. A sample of the screen is presented in the Google Drive folder, accessible from the FB post. This virtual AP packet allows the AP clerk to browse the supporting documents and modify documents if necessary to reconcile quantity or price discrepancies that may exist in any of the reconciling documents. And for assuming low discrepancies that demand the AP clerk's intervention, the system automatically approves payment and sets a payment to date. Many companies engage in business-to-business or B2B transactions use the vendor invoice file as a substitute for the traditional purchases journal in AP subsidiary ledger. The invoices in the file provide a chronological record of total purchases for the period, equivalent to the purchases journal, and the unpaid invoices at any point in time constitute the organization's accounts payable. Integrated Cash Disbursement System. The business process on the slide illustrates a typical cash disbursement system in which the entity makes vendor payments with hard copy checks that are mailed to the vendor or, in other cases, picked up by the authorized personnel of the entity's premises. Organizations that use electronic fund transfer or EFT to transmit payments employ different procedures which are not presented here. Each day, the due date fields on the vendor invoice records are scanned for items due to be paid. The following procedures are then performed on items that are due. 1. Checks are automatically printed, signed, and distributed to the mailroom for mailing to vendors. Checks above a preset materiality threshold will receive additional signatures not shown in the process prior to being mailed. 2. The payments are automatically recorded in a check register file. 3. Vendor invoices are closed by placing the check number in a closed flag field. 4. The general ledger AP controlling cash accounts are updated. And 5. Reports detailing these transactions are transmitted via a terminal to the AP and Cash Disbursements departments for a management review and filing.
Expenditure cycle, risks, and internal control. An objective of internal control is to mitigate the risk from errors and fraud. The following are the primary risks associated with expenditure cycle transactions. 1. Unauthorized inventory purchases. 2. Receiving wrong items, incorrect quantities, or damaged goods. 3. Inaccurately recording purchases and cash disbursement transactions in journals and accounts. 4. Misappropriation of cash in inventory. And 5. Unauthorized access to accounting records and confidential reports. Internal control activities consist of 1. Physical controls and 2. ID controls. The purpose of physical controls is to control the actions of people. These consist of 6 classes of internal control activities. 1. Transaction authorization. 2. Segregation of duties. 3. Supervision. 4. Accounting records. 5. Access control. And 6. Independent verification. IT controls comprise general controls and application controls. General controls are not specific to a particular cycle or subsystem, and thus do not apply to the expenditure cycle risks directly. Computer application control consists of input controls, processing controls, and output controls. The discussion that follows examines and compares how physical and IT controls technique apply in both basic and advanced technology systems to reduce the risks identified. Risk of unauthorized inventory purchases. Unauthorized inventory purchases places the decision of what to buy, when to buy, and from whom to buy solely at the discretion of the purchasing agent. This can result in excessive inventory levels for some items, while others go out of stock. Either situation is potentially damaging to the firm. Extensive inventories tie up the organization's cash reserves, and stockouts cause lost sales and manufacturing delays. Furthermore, such discretion can lead to frauds such as kickbacks to purchasing agents from unapproved suppliers who charge above market prices for their inventory. Physical controls. Transaction authorization. The objective of transaction authorization is to ensure that only valid transactions are processed. When inventory levels drop to their predetermined reorder points, inventory control formally authorizes replenishment when a purchase requisition to trigger the purchasing function. Formalizing the authorization process promotes efficient inventory management and ensures the legitimacy of purchase transactions with valid vendors. ID controls. Automated purchase approval. The objective of automated purchase approval is to prevent unauthorized purchases from unapproved vendors. Therefore, computer logic, not a human being, decides when to purchase, what to purchase, and from which vendor. The key attributes needed to execute his logic come from the purchase requisition file and the valid vendor file. Proper functioning of this control depends on adequate procedures for identifying vendors and placing them on the valid vendor list. If access to the valid vendor file is not specifically controlled by a password and door encryption, an unapproved vendor could be added to the file, and the control will be circumvented. To allow for operational flexibility in unusual circumstances, however, the system should provide a management override option to purchase from unapproved vendors, which may be performed only by a supervisor. Any such overrides should be fully documented in management reports. Risk of receiving incorrect items, quantities, or damaged goods. The receiving department is responsible for inspecting and counting large quantities of valuable assets that arrive from vendors. Once inspected, a receiving report is prepared and the inventories are stored in the warehouse. Failure to perform the receiving tasks correctly places the firm at risk of accepting incorrect items, incomplete orders, and damaged goods. Physical controls. Independent verification. When goods arrive from the supplier, receiving clerks verify that the items are correct in type and quantity and inspect them for condition. whether they are damaged, spoiled, etc. To perform this verification, the clerk obtains a blind copy of the original PO from purchasing. The blind PO has all the relevant information about the goods being received, except for the quantities and prices. To obtain quantity information which is needed for the receiving report, the receiving personnel are forced to physically count and inspect the goods. Supervision. Supervision is critical at this point to ensure that clerks properly carry out these important duties. Packing slips which contain quantity information and could be used to circumvent the inspection process typically accompany the incoming goods. A supervisor should take custody of the packing slip while receiving clerks count and inspect the goods. If receiving clerks are provided with quantity information via an open PO or packing slip, they may be tempted to transfer this information to the receiving report without performing a physical count and inspection. IT controls. Scanner technology. The basic concept of inspection can be enhanced through the use of IT controls. Product code scanners in the receiving department and warehouse will reduce the risk of human error in receiving and storing incorrect products. When scanned by the receiving clerk and the warehouse, the system will verify that the items received match those on the purchase order. Risk of inaccurately recording transactions in journal and ledgers. Inaccurate record keeping can take many forms. The following outline some common expenditure cycle errors, but is not intended to be an exhaustive list. 1. Purchases from vendors are incorrectly calculated. 2. Accounts payable go unrecorded or are recorded in the wrong period. 3. Vendor bills customers for items they did not receive, back ordered. 4. Vendor cash payments are inaccurately posted to accounts payable or are posted to the wrong vendor accounts payable. 5. Summaries of purchases, accounts payable, cash disbursements, and inventory levels are incorrectly posted to their respective TL accounts. Physical controls. Transaction authorization. The AP function authorizes cash disbursements via the AP pocket. To provide effective control over the flow of cash from the firm, the cash disbursement function should not write checks without this explicit authorization. Accounting records. The control objective of accounting records is to maintain an audit trail adequately for tracing a transaction from its source document to the financial statements or vice versa. The expenditure cycle employs the following accounting records: AP subsidiary ledger, check register, and general ledger. The auditor's concern in the expenditure cycle is that obligations may be materially understated on financial statements because of unrecorded transactions. This is a normal occurrence at year-end closing, simply because some suppliers or some supplier invoice do not arrive in time to record the liabilities. This also happens, however, in an attempt to intentionally underreport liabilities. Hence, in addition to the routine accounting records, expenditure cycle systems must be designed to provide supporting information such as the purchase requisition file, the PO file, and the receiving report file. By revealing these peripheral files, auditor may obtain evidence of inventory purchases that have not been recorded as liabilities.
Independent verification. The general ledger function provides an important independent verification in the system. It receives journal butchers and summary reports from inventory control, accounts payable, and cash disbursements. From these sources, the general ledger function verifies that the total obligations recorded equal the total inventories received, and that the total reductions in accounts payable equal the total disbursements of cash. Many transaction errors that might occur in the source subsystems will be flagged by discrepancies in the summary numbers that they provide to the general ledger function. IT controls. Input data edits. Recall that a basic assumption in transaction processing system design is that master files such as their inventory, their accounts payable, and the general ledger are clean and error-free. Transaction data, in contrast, are assumed to be dirty and contain various errors such as transposed digits in account numbers, invalid inventory part numbers, and transaction data, in contrast, are assumed to be dirty and contain various errors such as transposed digits in account numbers, invalid inventory part numbers, and clerical errors. If not detected before being processed, these errors will corrupt the master files of the system. Input controls are edits that focus on the integrity of transaction data being entered into the application. The following edits are programmed into the system to minimize the risk from data input errors. 1. Controls including checks for missing data, numeric, alphabetic data, and invalid data values will reduce the risk of undetected data entry errors by clerks in the AP, Inventory Control, Receiving, and Cash Disbursements departments. 2. Check Digit Control will provide control over accessing the wrong accounts. Non-vendor and inventory account numbers are susceptible to transcription and transposition errors during data entry. A check digit control will reduce the risk of such errors when department clerks enter account numbers into their systems. Error messages. When posting to the inventory and AP subsidiary ledgers, the computer program Magic must correctly identify the inventory and vendor records being updated by matching the inventory item numbers and the vendor account numbers in the receiving report and supplier's invoice to those in the inventory and AP subsidiary files respectively. Any mismatched conditions should produce an error message to the computer operator. Automated postings to subsidiary and GL accounts. The record-keeping functions, which in basic technology systems are performed manually by accounting clerks, are automated in the advanced technology system. In a manual environment, segregation of duties among inventory control, purchasing, accounts payable, cash disbursements, and the general ledger functions is the important physical control designed to prevent or detect human errors and fraud. In the advanced technology system, a computer application which is not subject to human failings such as yielding to situational pressures and or lacking ethical standards decides which account to update and by how much. By eliminating the human element from accounting activities, the potential for errors and opportunities for fraud are significantly reduced. Although since these are labor-intensive activities, automating them gradually or greatly improves efficiency of operations. These automation benefits depend upon the proper functioning of the computer applications that perform accounting tasks. An undetected program error may affect thousands or even millions of transactions with devastating consequences to the financial statements. An organization system development and program change process is therefore critical to ensuring that computer applications do what they are intended to do when they are placed into service and are protected from accidental, malicious, or fraudulent modifications over their service lifetime. In assessing application integrity, auditors seek answers to such questions as 1. Is the logic of the computer program correct? 2. Has anyone tampered with the application since it was last tested? And 3. Have changes been made to the program that could have caused an undisclosed error? File backup. The physical loss, destruction, or corruption of digital accounting records are serious concerns. File backup procedures need to be in place as part of the daily processing of transaction data. The accountant should verify that such procedures are performed for all subsidiaries and general ledger files.
Risk of misappropriation of cash in inventory. The greatest risk of inventory theft occurs in the receiving department and the warehouse. Misappropriation of cash may take the form of fraudulent payments to individuals posing as vendors. It may also involve erroneous payments for items not ordered or not received. These risks can be reduced to control such as supervision, independent verification, segregation of produce for automated procedures. Physical controls, supervision. Regional departments are sometimes hopelessly cluttered due to superior. In this environment, incoming inventories are exposed to theft until they are secured in the warehouse. Inadequate supervision can create an environment conducive to the theft of inventory in transit. Independent verification. The AP function plays a vital role in the verification of the work others in this system have done. Copies of key source documents flow into this department for review and comparison. Each document contains unique facts about the purchase transaction, which the AP clerk must reconcile before the firm recognizes an obligation. This control is called a three-way match and involves the following three documents. 1. The purchase order, which shows that the purchasing ordered only the needed inventories from a valid vendor. 2. The receiving report, which is evidence of the physical receipt of the goods, their condition and the quantities received. The reconciliation of this document with the PO signifies that the organization has a legitimate obligation to pay. And 3. The supplier's invoice, which provides the financial information needed to record obligations as an accounts payable. The AP clerk verifies that the prices on the invoice are reasonable compared with the expected prices on purchase order. Segregation of duties, inventory control from inventory warehouse. Inventory control keeps the detailed records of the asset, while the warehouse or stores has asset casters. These tasks should be kept separate. At any point, an auditor should be able to reconcile inventory records to the physical inventory. Segregation of duties, accounts payable from cash disbursements. An individual with combined responsibilities for establishing accounts payable and for writing checks to vendors in payment of accounts payable could perpetrate a fraud against the firm. For instance, he or she would establish fraudulent liabilities to an associate posing as a vendor company, and then write checks to discharge the folly obligations. Segregating these functions greatly reduces the potential for these type fraud. It controls automated three-way match and payment approval. An automated three-way match replicates the manual counterpart as follows. When the AP clerk receives the supplier's invoice, the clerk accesses the system and adds a record to the vendor invoice file. This act prompts the system to automate and create a eventual AP packet by linking the vendor invoice to the associated purchase order in receiving report records. Using the PO number as a common attribute, the application then reconciles the supporting documents using programmed criteria for assessing accuracy. For example, the system may be programmed to approve domains of any invoice amount that does not exceed 1 million and 1% of the estimated price on the purchase order. Items that fall within limits are automatically approved and paid on the due dates. Discrepancies in excess of the threshold are submitted to management for review through manual approval. Through the virtual AP packet screen, management may view the supporting documents and exercise an override of the fifth payment to force payment. The override should be performed only by authorized management and should be fully documented in management records. Multi-level security. This is a program technique that allows multiple individuals to simultaneously act as system, but provides segregation of duties to limit their access privileges and activities. Risk of unauthorized access to accounting records and reports. Accounting information is at risk from unauthorized access from outsiders, as well as employees of the organization. The motives for accessing accounting information include attempts to perpetrate a vendor fraud, 2. Theft of physical inventory. Access to inventory records allows the perpetrator to conceal a theft. And 3. Malicious acts, such as corrupting or leasing financial control. Physical controls. Access control. A firm must limit access to documents that control its physical assets. For example, an individual with access to purchase requisitions, purchase orders, and receiving reports has all the ingredients to instruct a fraudulent purchase transaction. With the proper supporting documents, fraudulent transaction can be made to look legitimate to the system and could be paid. Segregation of duties. The organization should be so structured that the perpetration of a fraud requires collusion between 2 or more individuals. To achieve this objective, certain record-keeping tasks simply separated, specifically subsidiary ledger, accounts payable and inventory, journals, gentries debtors, and the general ledger should be separated. An individual would tie different individuals. An individual with total record-keeping responsibility in a pollution with someone with asset custody position to perpetrate a fraud. Although not entirely eliminated, the risk of collusion is reduced while segregating these tasks. The more people involved in a task, the more difficult it is to collude, the greater the risk on the factor. This will have a deterrent effect on those contemplate fraud. ID control, password control. Digital accounting records are vulnerable to unauthorized access. To mitigate this risk, organization management should implement a robust password control policy to prevent unauthorized access to computer files and programs that reside in each of the departments. The application logic should require and prompt users to change passwords periodically. Corporate policy should require strong passwords of 6 or all characters that consist of both alphabetic and numeric characters. Multi-level secure. This is a program technique that permits its simultaneous access to a central system by many users with different access privileges, but prevents them from obtaining information for which they lack authorization. 2 methods for achieving multi-level security are the Access Control List, or ACL, and they are based on Access Control, or RBAC. Through these techniques, purchasing, receiving, accounts payable, accounts purchase, and general ledger personnel are limited in their access based on the privileges assigned to them.
Re-engineering using EDI, the Ford Motor Company case. EDI technology was devised to expedite routine transaction processing between manufacturers, wholesalers, and retailers by connecting buyer and seller computers via a private network or the internet. When the buyer's computer system detects the need to order inventory, it automatically transmits a purchase order to the seller, which is approved and processed by the vendor system with little or no human involvement. A key element of successful EDI is the implementation of a trading partner agreement to eliminate the discrepancies that require human involvement to resolve. In particular, the receiving function and the AP task of reconciling purchase orders, receiving reports, and supplier invoices are labor-intensive and costly. The following examples show how re-engineering these activities can produce considerable cost savings. The Ford Motor Company employed more than 500 clerks in its North American AP department. Analysis of the function showed that a large part of the clerk's time was devoted to reconciling discrepancies among supplier invoices, receiving reports, and purchase orders. These discrepancies were the result of too many vendors and unreliable vendors. The first step in solving the problem was to change the business environment. Therefore, Ford initiated trading partner agreements with a reduced number of suppliers. The parties agreed in advance to terms of trade such as price, quality, quantities to be shipped, discounts, and lead times. Also, each item used by Ford would be supplied by a single vendor. With key sources of discrepancy eliminated, Ford re-engineered its workflow to take advantage of the new environment. The key features of the system are as follows. 1. As inventory needs are detected, the system automatically sends a digital EDI purchase order to the vendor. 2. When the goods arrive, receiving personnel perform only cursory inspection, since quality and quantity are guaranteed by the trading partner agreement. 3. Because the financial information about purchases is known in advance from the trading partner agreement, the vendor's invoice provides no critical information that cannot be derived from the receiving report. By eliminating this source of potential discrepancy, Ford was able to eliminate the three-way match for the majority of purchase transactions. And 4. Payment is made automatically by electronic fund transfer directly to the vendor's bank account. As a result of its re-engineering effort, Ford was able to simplify its workflow and reduce its AD staff from 500 to 125. Some organizations have taken re-engineering even further by eliminating the receiving function entirely. The applicable base is to send goods directly to the production department and thus bypass the receiving area and avoid production delays and the associated handling costs. An accounting and auditing problem that must be overcome is how to account for inventory receipts when there is no receiving function and no receiving report. One way of dealing with this is to calculate the number of parts received based on the products produced, in which the parts are components. Supplier payments are distributed based on production or part usage, and by having only one supplier per part, the question of which supplier to pay is self-evident. An additional problem to deal with is accounting for scrap in the production process. Since scrap does not end up in finished production, it will not be counted, and vendors will not be paid for materials that were scrapped. Separate accounting procedures need to be implemented to record and monitor scrap. EDI control issues. EDI poses unique risks for organizations that need to be recognized and controlled. One of them is ensuring that, in the absence of explicit authorization, only valid transactions are processed. Another risk is that a trading partner, or someone masquerading as a trading partner, will access the firm's accounting records in a way that is unauthorized by the trading partner agreement.
There it is, Chapter 4, Expenditure Cycle, Purchasing and Cash Disbursement Subsystems. In the next chapter and lecture video, we will discuss the two other subsystems of the expenditure cycle, namely the payroll and fixed asset management subsystems. Thanks for listening and stay safe always.